The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 12th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. I think you'll like this one. I know I do. You've heard our leader, our fearless leader say, what you think about, you bring about, and what you focus on grows. Well, what does that mean? I say that there are 6 steps to become what you think about. Try this for the next 30 days, folks. Don't wait till New Year's Eve to make your resolution. Try it right now. Begin today for the next 30 days because it could change your life. Step number one, write down on a card. I would prefer that you use a card. You know, one of those little index cards, memo pads, something that's not going to be a little piece of paper that you can throw away. Get one of those little index cards and write down on it. Of course, you can do it on your phone. You're not going to throw your phone away, so you can use the memo pad of your phone and write down what you want more than anything. One single thing. One ping, Vasily. One single thing, folks. Make sure it's a single outcome and that it is clearly defined out there. Number 2. Don't show it to anyone. Don't show it to anyone, but carry it with you so long as you can. Look at it several times a day. Don't show it to anyone. It's just between you and yourself. Number 2, think about it in a cheerful, in a relaxed, in a positive way each morning when you wake. You know, put yourself in a state. Visualize, a rainbow, someplace where you're centered and you are strong out there. And then visualize it. Think of it in a cheerful, relaxed way. Number 4, look at it before you go to bed each night. As you look at it, remember, you must become what you think about. Use that imagination of yours. After all, it's the strongest nation on earth. That's right. It's your imagination out there. So use that imagination wisely. Number 5, now we get into the difficult part. Stop thinking about what you fear. Stop thinking about it, because each time a fearful or negative thought comes into your consciousness, what I really want you to do is I want you to replace it with a mental picture of your positive and worthwhile outcome. And step number 6, each day of this 30-day period, do more than you have to do in order to achieve that outcome. Take control of your mind, knowing that your returns will be in direct proportion to what you give. Yes, folks, what you think about, you bring about, and what you focus on grows. And those are the 6 steps in order to make that happen. Let's go check out what's happening with these markets out here. It's a sea of red. We've got the Dow down 69 points. It's trading out at 15,770 is the S&P. It's down 4, trading at 1778. The composite, it's off 1 point right now, trading out at 4,002. Russell 2000. It's flat. It's down 29 cents. Apple is up 48 cents. Intel's up 22 cents. To the upside, you've got Netflix up 378. Icon Enterprises having a little bit of a bounce this morning, up 356. Regeneron Pharmaceuticals up $3. Biogen, BIIB, that's up $3. New Skin Enterprises up $3. Pioneer Natural Resources, PXD, up a couple of bucks in change. Sarepta Therapeutics up a couple bucks. Continental Resources, CLR, up a couple dollars. A lot of things up a couple dollars. To the downside here, down $7. You've got Lululemon. It's off 10%. We'll go take a look at that stock chart. MasterCard off about $6. You've got Athena Healthcare down 6. That's about 4%. Granger WW off $5. Sherwin-Williams, the paint company, they're off a couple of bucks. Rand Gold Resources down 2. Visa off $2. Icky Bank down $2. AmTrust Financial Services off 2 as well. Our call number is 877-927-6648. Give us a call, folks. folks, we can certainly take a look at your stock chart. Let's go take a look here. Let's start off by taking a look at the indexes. Let's start with the New York Stock Exchange. Let's see what it is doing right now. It is trying to break a B point of a potential A to B equals CD down, and that A to B equals CD down, that would take us to a level here. Your A point is going to be the swing of November 29th. That's the high. That's at about the 10,229 level. Your B point out here is the December 4th low, and that's out at 99.90. Your C point, that takes you into December 9th. So your 1-to-1 is not that much further down. 99.2055. That takes you really right into the range of the last bar of swing point low, which would be November 8th, and that is at 99.0954 out here. So really, the New York Stock Exchange, ever since setting up that 3 drive to a top pattern, really just been in a consolidation. Just a consolidation. So from the 99.10-ish range all the way up to 10,229, that's the pattern that is trading. And we're going to take a look at consolidation patterns here shortly and see what's going on inside the futures market, because that's probably where our next signal comes from. If we take a look at let's take a look at the VIX index. That was up more than 10% yesterday, back up at that dead cat bounce at 0.382. Maybe it's setting up an A to B equals CD. It's trading out at 15.59. It is above the 50-day exponential moving average. That measures out at $14 and a penny right now. It's trading at 15.59. And yes, when the VIX is above the 50-day exponential moving average, that's where some real carnage, some real damage can be done inside of the markets. Let's take a look at the S&P 500. The S&P 500 right now, it's trading really below its consolidation range. Just on the daily chart here, you had a wide-ranging bar to the downside yesterday. We'll take a look at the volume behind that bar. Nonetheless, right now, a close, I would have to say a close below the level of 1795. I'm sorry, not 1777. You're at 1778. That would be a break of the consolidation range. A close below it, that would be a break of the consolidation range. That consolidation about, let's see, 1780, 18. So you're looking at about a 30-point consolidation range inside of the S&P 500. If we take a look at the Dow here, it's down 72 points right now. It's taking out its swing point from December the 4th. That could be setting up an A to B equals CD down. We'll take a look at the volume inside of the Dow Diamonds as well. It should be setting up a similar pattern. Your A point November 29th high, that's at 16,174. Your low, your swing point, December the 4th, that's at a price level of 15,791. Your C point out here, that comes in on December 9th, that high is out at it's 16,058. 1-to-1 A to B equals CD would take you down to about 15,675 out there. Let's go measure retracements from low to high, and we'll do that by coming down to the low on October 9th all the way up to this high put in on November 29th. Your point 382, just your dead cat bounce, would only take you to 15,618 of this A to B equals CD down. I suspect that is where the Dow will want to trade to. So that's the pattern that's going on there. Let's take a look at the Russell 2000. It formed and completed an A to B equals CD down yesterday. It had that island reversal candle formation. The island reversal candle formation, that occurred between the time period of November 27th, November 29th, and December the 2nd out there. A small, tiny little gap. Nonetheless, it was an island reversal up at the 1147 area here. But when we take a look at A to B equals CD down patterns, it has at least completed the 1-to-1 level. It did well. It's done that really today. 1100.63 is the number. What did it get down to yesterday? Yesterday got down to, it did it yesterday, 1099.74. So really completed that 1-to-1 A to B equals CD pattern. If we take a look at retracements off of its swing point low out here, that is November 7th. We go from that low all the way up to the high. What it's really done, it's completed, pretty close to the point 618, 786-ish range of the retracement level. Let's take a look at expansions of swing points. Let's see what we have going on here. So right at 1096.64 is your 1.618 expansion of your B to C swing point. Here is what the actual Gartley pattern pattern. That's what I would be drawing in. So we've got one pattern that is or is very close to completing. Let's just draw it in about right there, and then we'll go delete everything else so it makes it a little bit easier for you to follow along with us here. Let's get rid of the Fibonacci level. Let's get rid of that. Let's get rid of the formation tool. And there is your Gartley buy pattern right around the 1096.84 level out there. So you can see it's in between the 0.786, in between the 0.618. Retracement levels. That's what's going on inside the Russell 2000. Let's go take a look at the NASDAQ Composite. NASDAQ Composite here, really just consolidating. No A to B equals CD pattern or anything along those lines. The bottom of the consolidation, just a short-term consolidation. Really in, I would have to say, the swing point high, this key reversal session, November 18th. That really becomes the target area. 39.94.97. That is an old area of resistance. We'll see if it becomes a level of support. You're trading at 39.97 right now. If that area does not act as a level of support, then that says that price probably will go ahead and pull all the way back into the November 7th swing point area, somewhere between 38.55 and 39.38. That is what's going on inside of the NASDAQ Composite. Let's take a look at the NDX 100. The NDX 100 right now, it too really just consolidated. Its area of support should be the key reversal session from November the 18th. We can see that even though you had a nice wide-ranging bar yesterday, still not a lot of price damage inside of the NDX 100. In fact, the right now it's trading at 34.63. The high 34.29. That's a November 18th key reversal session out there. Still quite a ways away. 34.29. That's another, almost 33 points or so away from that level. That's what's going on inside the NDX. Let's take a look at the ETF structures out here. On the ETF, here is the IWM. You can see it's 0.786 Gartley buy pattern. That's at 108.65. Right now, just trading at the 1 A to B equals CD. That completed at 109.32. We've seen a low of 109.40. Yesterday we saw a line. We saw about this. Yesterday we saw a low of 109.32, an exact A to B equals CD to the downside. Volume here yesterday was 47 million shares, taking out the B point from December the 4th that had 40 million shares. So it did cross that B point. It did do it with volume, but it completed it all in one day. Now it came down with a wide-ranging bar, and typically you do not complete an A to B equals CD to the downside on a pattern, on a bar such as that. So the 108.64, that could be its next area of support out here. It also is running into this high volume bar. And I don't know what that bar really represents because it's not exactly wide price spread. I don't know what took place on that trading session. I do not know if that was just a rebalance effect or what took place on November 1st. What I do know, it's got 117 million shares. We'll find out if that area acts as support. That is the IWM, the Russell 2000 ETF. If we take a look at the Qs out here, the Qs right now, they're trading out at 85.04. Let's look at yesterday's action. Let me get rid of one thing on the screen here. Yesterday, the Q's volume off the top, but not really that huge. Volume yesterday was 36 million shares. Why do I say not really that huge? Well, heck, it's trading into December 4th. That had 37 million shares to the upside. Right now, Dow's off 98, S&P is off 6. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is trading off 85 points right now. S&P is down 5. You've got gold off $27. Silver's down 78 cents. And I mentioned during that first segment, some consolidating patterns. And so I said we would go over and take a look at the futures markets. And that's what I've got up on my screen right now. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can get the live stream of the show. That means you can see my chart live on your smartphone device, your iPad, your Dell pad, some kind of pad out there, by going to the homepage at TFNN.com. Over in the upper right-hand side, you'll see a button, 3 little smartphones. Click on that button, and you will see this. You'll see the chart, which is the Dow futures contract. Now, it's a 120-minute chart that we are looking at on my screen, and you're going to see a little yellow box here. It's shaded. It's about a 185-point move. It's really the consolidation, that the Dow has been trading. And what we can see here is that on the 120-minute chart, the Dow is in that extreme oversold territory. So it's traded now down below. Now, this is a 120-minute chart, and the bar that we're in right now on this does not complete until 11:30 this morning. So we've got an entire hour here. It is trading below that. If it does close below that, it gives a signal of a potential 185-point move to the downside. Now, the downside would take a break break of this consolidation pattern down to about 15,680 or so. If it cannot break the consolidation, what price ought to do is go back up to the top of that range, the top of that range being in the 16,050, 16,040 area. What we can also see here is a 1-to-1 A to B equals CD down that is in place here. Just your 1-to-1 pattern would say price could get down to 15,677. So you're trading at 15,758. You're trading below the consolidation right now. It's showing some cracks in the ice out there. This candle does not complete, though, until 11:30, but it would look like the first target here would be the 15,677, so long as we see a close, I would have to say, below this candle right here, which is 11:30 in the morning on November 14th. I would say that low of 15,763 out there. That's what I would be paying attention to. So that is on the Dow 120-minute futures contract. If we take a look at the ES Mini, ES Mini's got an even clearer consolidation. So this is the one to really be paying attention to because it's about as clear as you can get out here. This has been trading in about a 33-point consolidation level, so similar to what we were looking at on the daily chart. This, again, is also a 120-minute chart on the ES Mini, and that says a close below. We'll use the candle here from 4 o'clock in the afternoon on November 20th. The low there is 1774.50. A close below 1774.50. That sets up a move to about the 1745-ish area. So far, thus far, and in fact, I believe here, if we actually use Basil's peak and trough system here, it's right now in the formation on the 120-minute chart, the formation of that trough D out here, because the low that came in during this candle so far was 1775.25. I believe that's below 1775, 50. So just by a quarter tick out here. So here's the consolidation pattern inside of the ES Mini. If the ES is unable to crack this, that sets up a move to the top of the consolidation. The top of the consolidation being 1,800. Now, this consolidation has been going on for nearly a month. Really began back in November 13th. We're now December 12th, so it's been out here for a month. Maybe we're going to just simply stay inside this consolidation range for a bit longer. However, a break of that, and that becomes a whole different picture out here. The minimum retracement level, if in fact the ES Mini cannot bust through the consolidation, and I suspect that it's not going to when we were taking a look at the Euro-Japanese yen out here, the minimum bounce that you would see would be 1789. That's your dead cat bounce, but more likely the 1797 area is your 0.618 area of the retracement off of its most recent swing point high to low. And if you're coming in there with some wide-ranging bars, that sets up a move back up to the top of the consolidation right around 1811. So that's what we want to be paying attention to inside of the ES Mini. I think this is the best of the consolidation patterns out there, although let's go take a look and see what's going on inside the NQ, because that is going to be key. The NASDAQ futures, this is the 120-minute chart. This is the this is the December contract that we are looking at. The red diagonal lines that you're looking at on my screen, that is the rising price channel. Now, this is where we'll get another great signal as to what the markets want to do. Why do I say that? Because yesterday at about 2:30 in the afternoon, we saw the NASDAQ actually break the rising price channel. Has not broken through the rising price channel. It has tested it. It has tried to get back inside that. It has done that on the occasion here of about 7:30 in the evening last night. Tried it again here at the 9:30 session. Looks like it's trying to do it here right now during the 11:30 a.m. session. If it can get back inside there, that's bullish. And if it can't, then that sets up a potential move down to maybe about 33.75 here at 34.68. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 72 points right now. NASDAQ Composite is up a couple of points. Russell 2000 is flat out there. So let me just try to recap this, even though we're midway through the show. I want to just stay inside the 120-minute charts here because they offer really great trading patterns that way from a quick intraday 30-minute chart or what have you, a little bit less noise out here. So what we're looking at right now that I didn't get to during that last segment is the Euro-Japanese yen. You know, it's our favorite currency pair to track what's going on as far as the directional aspect of the markets out here. Now, what the Euro-Japanese yen has done, that's what we're looking at on my screen here, it is, number one, if you take a look at it from the time frame here of about 9 o'clock in the morning on December the 6th out there, really stayed in the extreme overbought condition. That did it from 9 o'clock in the morning, December 6th, all the way up until 7 o'clock in the morning on December the 10th out there. Made a nice high. In fact, if we go take a look at the daily chart out here, it is absolutely the currency pair that gives us the directional correlation as to what is going on inside the markets. It's a 120-minute chart that we're looking at to kind of filter out, to filter out some of the noise out there. So we're going to just simply filter out the noise. That's right. It's my ghost that is speaking here. It's not Steve. Steve-O is actually on the beach out there. He's going to be doing some surfing in a bit. And so if we take a look at the Euro-Japanese yen, what I want to show you is that it has completed a 0.786 Gartley sell pattern. Now, that's very important out here. I'm going to blow this up on my screen. I'm going to go ahead and show you what that pattern is. And that means that we've seen the A to B equals CD up pattern. So there's a nice Gartley sell pattern. In fact, you had a nice little dark cloud cover that took place at 5 o'clock this morning. But here's the key on this pattern right here. It's this wide-ranging bar coming into that 0.786 Gartley sell pattern. That is going to be the key. The market will go ahead and just totally crack and break loose if you see a close on the 120-minute chart below the low of that bar at 3 o'clock this morning. That low is 141.46. On the other hand, if it breaks out to the upside, a 0.786 Gartley sell, especially one that has worked like this, will turn into a butterfly. That butterfly says price will move to new highs. That's a directional aspect, and we want to be paying attention to it. So that's on the 120-minute chart for the Euro-Japanese yen out here. And it says, so it's got a Gartley sell pattern. So it could go either way, but we know what our line of demarcation is that we're going to be paying attention to. The Russell 2000, which has been the week index, it finished an A to B equals CD down. It finished the 1-to-1. 1098 was the number. It starts off with the swing point high at 1130 on November the 29th, so that was on Thanksgiving, the day after Thanksgiving, and that was at 1147.60. So it's completed a pattern out here. I wouldn't exactly say it's giving any kind of reversal signal, but we do see the bulls hanging out here. What I mean by that, as it completed the pattern, you had a little bullish engulfing candle, a sideways move on the very next session here. This is yesterday. Seeing a little hammer candle that took place here at 7:30 this morning out there. So that hammer has not been violated. So the bears are trying to defend the position at the 1097 level out there. We've got the ES Mini. That's got this beautiful consolidation pattern here that has held for the last month. It's been tested back in November the 20th. It was, in essence, tested again back in December the 4th, and then yesterday and today out here. So if this pattern here holds, the Euro-Japanese yen starts to move topside, it says that price ought to bounce to 1797, but more likely back to the top of the range right around 1811. So that's inside the ES Mini. And inside the NASDAQ futures, the NASDAQ has broken through the consolidation, the rising price channel. If it gets back inside it, you might say, hey, what is back inside it? It's a great question. It's always going to depend on time. This is a 120-minute chart. But I would safely say, near 3473, 10 points higher, 3483. If you see the NASDAQ futures trading above 3483, staying above 3483, then they're back inside the House of the Rising Sun. Great album out there. And that would say, okay, the move to the downside is over, kaput. That's it. And so that's what we want to be paying attention to. Of course, we had the Dow. The Dow itself also is inside that, the consolidation. Of course, its consolidation not as clean as the ES Mini. So I would stick with the ES Mini, the NASDAQ, and I would stick with the Euro-Japanese yen on the 120-minute chart out there. So that's what we're looking at. That puts things into perspective. No question the bears have the ball right now inside the New York Stock Exchange. They've been able to push the oscillators quite a bit lower. You got 908 net declining issues as we speak. The VIX is, in bearish territory. We'll see how this day plays out. The VIX, of course, yesterday had a one-day rate of change above 10%. That usually leads to a bounce in a market either within the next 48 hours. So either today or tomorrow out there. And so we have the things that we're looking at. So that is the overall market as far as where we're at. Key inside of the ES Mini is going to be 1784, so it's trading at 1778 right now. If it can close above 1784, that would also be a signal there that, okay, you're going to at least got a counter-trend rally that has begun, but more likely that move back up to the top of the 1800 area box inside that consolidation. Otherwise, 1784 becomes a selling point. That is where the bears are camped out, and anytime right now during today's trading session, it'll be a different number tomorrow, depending on what happens price-wise. But right now, 1784 is a good mark out here. Now, Something I don't see too often. I'll put this chart up on my screen here. It's a combination of different patterns, but one of the patterns that you are looking at is what's referred to as price relative strength, the divergence out here, and it's using the 14-period relative strength indicator, the anchor point that is being used out here because it's the lowest level for that 14-period RSI. That actually came in December the 11th. That was, today's the 12th. That was yesterday. It came in at 10:30 in the morning. And what we can see here is that the market has been making these lower lows, and it's been doing it on less relative strength out there. So that's another indication that the selling pressure is kind of waning out there. At least it's waning inside of the ES Mini. I can actually put this, I haven't done it, but let's go put this on the Dow. Let's use the same Dow, and because that's the leader in the clubhouse. Let's see if, this has really got the same kind of pattern here also set up, so you can see that the Dow pushing lower. Now, no reversal signal here just yet. Of course, you would have a bullish engulfing candle if during the 30-minute session we're in. That means coming into 11 o'clock, you would see a close above 15,781. You're at 15,767 right now. And if you saw that bullish engulfing candle and then a little bit higher close out there, that would say that this pattern would then become a valid pattern. So we're watching this push lower, but what we're seeing here is it doesn't have the vigor. It doesn't have the strength out there. So that's on the Dow futures. Let's go take a look at the NASDAQ futures out here and see what it shows, see if it's got a similar type pattern. Yeah. So it's also got that pattern here, much less relative strength. I mean, take a look at that. Its relative strength coming in also at this came in at 12:30 yesterday. So I think on the ES Mini was at 10:30 or something like that. Inside of the NASDAQ futures, the low point on the 30-minute chart for the 14-period relative strength, that came in at the 12:30 session. You can see all of these other lows that it's making. It's doing it on less relative strength. It just doesn't have the energy to actually push lower. Now what we're actually seeing here, a little bull sash candle that's forming as we come into the 11 o'clock session. Of course, only 10:43, so anything can happen with 17 minutes left to go. However, if we close inside the NQ30, wherever it closes, as long as it is above the trading session of, well, I tell you that the most bullish outcome would be a close above, and it doesn't have to be on the 30-minute session. It could be any time. Here, a close above right now, 34.7725. That would suggest a reversal of fortune out there inside of the NASDAQ futures. Let's take a look at the Russell 2000 now. The Russell 2000 feed that I have has a 10-minute delay out there. And inside the Russell, that actually gave us the price relative strength divergence pattern here that completed, and that was at about going into the close here yesterday. But we can see the Russell 2000, which was weak, just letting everything else kind of catch up to it because it's really just been moving sideways out there. So that's what's going on inside those intraday charts. Now, let's go take a look at Goldilocks and silver. Let's go see what they are doing. Gold is trading down $28 right now. Where is that chart? Here we go. So we take a look at Goldilocks. It's trading into the swing point from June 28th, says therefore, and a close inside 1234.80. Right now you're trading out at 12. Where is it? Gone. That ghost, come on back. It's at 1228.40 out here. Close inside the 12, below 1234.80. Says, okay, there's your A to B equals CD down. Wants to still be tested. 1178.70 out there. And now, could even be more than that. I think trading gold and silver is going to be a little bit tricky here because of the euro. I covered it during the last hour, but we'll go ahead and we'll cover it again here just to bring everybody up to speed. And the reason why I say that, inside of silver, inside high host silver, it's trading inside the June 28th swing point, the top of which is 1963 or 1951. If it trades inside that, it closes inside that, it can set up and move all the way down to the lows of that, which are about $18.18 out there. Volume so far today, 33,000 contracts. It made a swing point low with 38,000 contracts on December the 4th out here, where we saw a bit of a breakout, and so it's coming back into that swing point with the volume out there that says, it's at least going to go test the low, which is 1889, but I suspect it really wants to complete the 1-to-1 A to B equals CD down that takes you all the way back into the lows from June 28th. Light sweet crude out here. Light sweet crude is up 31 cents, taking its time as it tries to get up to 99.59. That is the dead cat bounce inside of light sweet crude. Bonds here not doing a whole lot, just really another sideways trading day, probably waiting for the FOMC meeting. I believe that is next Wednesday out there. Everybody waiting with bated breath, except in the case of natural gas. It is on its way up to the 447 range. Now it is in the extreme, and I do mean extreme, overbought condition out here. So please have stops in place if you're in the UNG or what have you, because this is due for a bit of a correction. Where could that correction take you to? Well, if we assume right now, because it's the only thing I have, that, what the heck happened there? Man, I got ghosts and goblins all over the place. So let me do this here. Let's get rid of that. I'm not saying that today's high is the high, but we do have the ability to measure those swing points. If today's high were to be the high out here, just a normal bounce would take you down to about 405 or maybe 382 would be your 0.618 level. What does that mean on the UNG out here? That is the ETF for nat gas. Let's go take a look at it. See what because it's really got the same patterns out here. It has now completed, well, let's see what it's actually completed out here. That was the old A to B equals CD. Let's do this. Let's do that. Let's clean this up a bit. So let's take a look at its A to B equals CD patterns. The A point all the way down on August the 8th. The B point out here coming in on September 19th, and your C point down on November 4th. So it's up above the 1 to 1.272 level. Nonetheless, a natural pullback inside this pattern takes you to the 0.618 area, and that would be around 1848. 1964 is your dead cat bounce. You don't have a reversal signal yet. I'm not saying to get out. I'm just saying, hey, tighten your stops out here, because this thing is very much in the overbought territory. On the UNG, the last time that you were this overbought, let's see on a daily chart if I can find a spot. I'd have to go, be right here about March 4th of 2008 was the last time when this thing, and it had a decent pullback. If I go ahead and open it up at that stage out here, the UNG had a decent pullback. It worked off that over. In fact, it pulled back. Let's take a look at where it pulled back to off of its swing point out here. Let's use the two swing points that we'll measure. The first one here, which is we'll use the C point of the A to B equals CD. I'm using the January 23rd level all the way up here to, so you can see it pulled right back to the 0.618 area out here. Now, this is obviously adjusted because of all the reverse splits. It says it came back to 334.81. That's not really what is important to look at. What's important to look at is what was the retracement when it was last overbought like this. So be careful if you're in the UNG. Protect those profits. It would not be unusual for that same pattern to occur again. We're going to go out to Houston, talk to Mark about Lululemon as soon as we get back from this break, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 73. Composite is up 6. Russell 2000 is up 2 points out here. The S&P is off 3. We're going out to Houston, Texas, to Mark. Mark, thanks for calling. Thanks for holding. How are you this morning?
Good, good. Thank you so much for taking my call.
My pleasure.
Yeah.
You looks like two equities you wanted to look at?
Yes, sir. The first one is Lulu, and I'm basically short around 66.
Okay.
And I'm just curious where you think, the downside potential is. I've been patiently waiting for this thing to break, and today was the day, I guess.
Yeah. If we take a look at the daily chart out here, that's what I'll put up on my screen. So, what it's doing, your first real sign of big institutional selling came into this equity on June the 11th out there, and it had 28 million shares to the downside. And right now, it's and then it made a lower low, and it made a swing point out here on June 21st. Let me blow this up on my screen. That's what it's trading into right now. Now, it's doing it with volume, and it's still going to be a key for you to be able to watch what happens as the low of that gets tested, which is 59.60. So the benchmark volume on that is going to be 59.60 for you to pay attention to. What you want to see is that level broken. You'd prefer to see it broken today, because then that could be setting up an A to B equals CD down. And if we take a look at what that would project out here, that price projection would take us to about $55.03. Now, that makes a lot of sense because if it can break that swing point, Mark, what it will do is it'll come back into the next lower swing point, which is back in August 3rd, 2012, right around 55.20, 57.02. Now, if it can't bust this swing point, then, meaning the first one we were talking about, which was June 21st, and just make sure that you tighten up your stop out there, because last time that this thing moved down with volume, which was on September 12th, it was able to bounce out of there and come back up to its highs back here at about the $77 range. So this thing, chart pattern-wise, has got plenty of gaps down, plenty of gaps up, and and your best bet at this stage is that this thing would get into about the swing point going back into that early August time frame. That seems like that's probably the extent of the move at this stage. I mean, it's had about all the bad news that you can get. Right? CEO, moving, stepping aside, because of his comments or what have you, see-through pants, and it's actually kind of holding up pretty well.
Mm-hmm. But it has to break that swing point today on the volume and close below that swing point, correct?
It doesn't have to break it today, but I would say that today is probably the day with volume. It came out with earnings, right? So
correct.
Today's where you've really got, it's coming into that swing point with volume, and that become the easier time for it to break it versus, not that it can't tomorrow, but you've got the volume today because you've got only 5.9 million shares on June 21st, and already today in, an hour and a half worth of trading, it's done 12 million shares. So it's ideal. You like to see a swing point broken with volume. Doesn't have to be, but that's what gives you the confirmed A to B equals CD down. Now, on a shorter term time frame, what it did was it did break the swing point. That is a gap down below it from November 14th out there. And what you can see is just your 1-to-1 A to B equals CD is about the lows that we've seen today. 60.19 is that 1-to-1 area out here. So it's just, in using a benchmark, it should be able to bust through that area. I'm not saying close out the short, but, it should be able to bust through that. There's no reason for it not to. It's got the selling pressure behind it. It's got the volume. And if it can't, you've got to ask yourself why.
Right.
Now, I don't have the answer to that, but I'm just saying it just means, just tighten up your stop.
Okay.
Or take profits. There's nothing wrong, or take profits. There's nothing wrong with that either. Oh, man, I'm sorry. We're in the last segment here. But if you do call back tomorrow, we'll be happy to take a look at your other equity as well. I believe it was ENES. All righty. Hey, have a great day. Thanks for calling. Folks, have a great Thursday. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.